Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is June 6, 2013, and we have yet another sell-off in this market today. Now, we have been talking about for the better part of the year about how this market kept on escaping outside the upper Bollinger Band and how that would make me nervous about adding new positions when it was at that juncture. However, now we got the complete opposite taking place in this market, and essentially what you have is we have the S&P actually trading below the 50-day moving average, which hasn't occurred since back on the 18th of April. And then you also have it trading below the upper Bollinger Band, which we haven't seen happen since, a long time ago, February 22nd. Here's two things to note real quick, okay? First thing is that the last time we went below that lower Bollinger Band, we bounced, and we bounced to new highs, okay? As well, the last time that we went below the 50-day moving average, we bounced and immediately thereafter and went to new highs. So today, we have us dropping below the lower Bollinger Band for the second straight day and dropping below the 50-day moving average for the first time since back in mid-April. So there's a good possibility we're at a point with us being oversold. We're actually oversold for the first time this year. Since December of last year was the last time we were oversold. But with it being grossly oversold, with us pulling back more than 4% for the first time since October, November time frame. It beckons that this is a pretty extreme move and far outside the typical market movements of the past year. So the standard deviation of what we're seeing is pretty intense here. So I do think we're going to see a bounce here. I've been thinking we probably would have had one like 2 days ago, but we didn't. But now, more and more each day it gets more and more likely. Now, a couple things to also note is the path that this market is taking compared to the last time we saw a significant sell-off. Note here how you have a solid sell-off followed by a decent bounce, followed by another sell-off that wipes away that bounce, and then a move lower below key support levels, and then we bounce higher. All right, this is why I was thinking we would probably see a bounce today, and for the most part we were seeing that until in the last 30 minutes to an hour or so when we sold off pretty heavily, going from 1613 all the way down to 1598, literally within about an hour's worth of trading, if not less. So it was a pretty heavy move. A lot of money was made by Oscar, also known as @Fuinhaz on Twitter, Fuinhaz. You can follow him there. In any case, he was shorting some stocks, did pretty good off of them. But if you notice here, we got the same pattern here. Huge sell-off, followed by the bounce. Equal sell-off the next day, follow through the following day below key support levels. And that's what you get here, follow through key support levels. So the only difference is the action that we've gotten in the last hour that has pushed the market even further into the red, which is a bit surprising for me. Though you could say the similarities do exist in the fact that we're trading below the 50-day moving average now because of that sell-off, just like we were back on April 18th. So that's a couple of things that are leading me. I haven't shorted anything in the sell-off. I actually hold on to my positions, and they haven't killed me in the process either. I mean, I still have a number of positions that are still trading in the green. Actually, half of my positions are trading in the green. At one point, there was still about 4 positions trading in positive territory. But at this point here, though, I've seen it time and time again where the bears get really excited. They've gotten excited when it looked very, very obvious that the market was heading lower, most notably back here on the 18th again, and then back here again on February 25th. Below key support levels, there was no reason to stay long in this market. Everything was pointing at an extended sell-off. This was the end. Quantitative easing had finally run out of railroad tracks. And yet, and then again here too, back in late December. But instead of actually selling off like we would have all thought we would have done, the market just pulls out just out of nowhere. I kid you not, out of nowhere, just a monster rally. Now we have employment numbers coming out tomorrow, and that could maybe be something that, if we have a positive report, could propel this market yet again to new highs. So that's just some stuff worth thinking about and considering as you make your decisions on whether you want to get long or short this market. I don't doubt that there could be more to the downside. Oscar in our splash zone, he's been adamant that we could see a bounce around 159.40 and 159.80 on the SPY. So let's pull up the SPY and just show you where that's at real quick here. So not too far away. You're talking about about a minimum of 9 points lower to as much as 13 points lower. So let me get a box here and I'll draw it for you. There we go. Had to find that darn box. All right, it looks like it's about. That's basically where Oscar is seeing this market going down to before it bounces. Now, it lines up pretty nicely with this support level right here on the SPY, where it had tested it back on the 11th of April, and then again here in early May and late April as well. So, some things to consider: bounce levels, possibilities. I wouldn't be getting real short on this market right now. I just think it's possibly from a swing trading standpoint. It doesn't mean that you can't continue to short this market. From a day trading standpoint, as conditions warrant you doing so. But I'd just be careful about loading up on heavy positions overnight there. So that's going to be it for today. That's my little jab at this market here and what I'm thinking. If you guys have any questions, feel free to hit me up in the splash zone. If not, I'm easily available at ryan@sharepointer.com. You can follow me on Twitter, which is @sharepointer. Oscar is @Fuenhaus. So y'all have a great rest of the day. Hang in there with this market. Don't get too carried away by the selling and thinking that you have to get heavily short all of a sudden just because you're worried about missing a bigger move.